Have stock market bulls capitulated in the tech-led sell-off that saw the S&P 500 and Dow Jones Industrial Average erase their 2018 gains while pushing the Nasdaq Composite deeper into correction? That's an important question because identifying the bottom of a market correction is a contrarian process. And of particular note is a chart pattern dubbed Buy, Cry, Die by author Jesse Stein in his book Insider Buy Superstocks. Let's take a look. According to author Jesse Stein in his book Insider Buy Superstocks, a favorable risk-reward setup can occur when a stock in a multi-month uptrend declines and makes three lower lows within a short period of time, usually within 4 or 5 weeks. The rule of thumb is to look for a stock or the market to make three lower lows, with a third low ideally even slightly below the trend of the first two. This is the BCD, or Buy, Cry, Die setup. From a sentiment standpoint, bottom-picking investors try to time the stock market bottom by the first spike lower. At the second lower spike, these new investors cry in anguish. At the third and final lower spike, they die and sell their shares in exasperation. The third spike lower is precisely where you want to be waiting with open arms. And as Jesse has seen hundreds of stocks rocket out of such triple oversold conditions, things in life tend to come in threes. Stock patterns are no different. So this is the chart of Buy, Cry, and Die, and you can see labeled the downtrend Buy, the second downtrend Cry, and then the last downtrend Die when there's the capitulation. So are we in capitulation? So let's go ahead and take a look at our charts. This is the 6-month daily chart on the Fidelity Nasdaq Composite Index tracking stock. The symbol is ONEQ. And per the characterization in the book, Jesse Stein, this is a fairly accurate depiction, in my opinion. Here's the top at this point. This is the first downtrend, which is the buy the dip sort of. This is the second downtrend, or the cry in anguish, because we're lower than that first low here. And then the capitulation, or the third downtrend in die. So in my opinion, we are pretty close to the bottom. I'm not going to say that we're exactly there, but I think that we are not far. So looking at the MACD, what we see here is very interesting, is that this bottoming process right there, that coincides with the second downtrend here, or cry. The first downtrend there would correspond with this level here, and of course we're in the die portion of the chart. So what's interesting is that we are improving. So in my opinion, things are mending, but we're not quite bottoming here in the fast line, which has gone through the slow line. So I think we do need a little bit more time into, say, next week or so, and especially with the low trading volume and then the end of year selling that may occur. So I'm not quite ready to say that we're at the total capitulation here, but we are very close. You can see that as well here in the histogram. We're improving all the way through here. Down into the RSI, relative strength, same thing, a definite improvement here. As well, the stochastic shows somewhat that the MACD shows. The volume is not necessarily all that indicative here. And then the Williams isn't really showing us all that much either, other than the fact that we've had three bottoms here, this being the third one, and then the slight downtrend here. So I would imagine maybe a little bit of sawtoothing before we head back up to the chart again, the price chart. We can see again the three downtrends, 1 here, 2, and 3. but I think we still need a little bit more of a bottoming process here in the third for me to say that capitulation is in and the bottom is in the market. But in my humble opinion, we are very close. So I do like this chart pattern here called buy, cry, and die. So for today, that's ChewDog Charts. Thank you.